It's the 24th of May 2021. My name is David Hickson, and in today's market update we're going to be discussing confirming peaks. Before we do that, I must ask you to please make sure that you have read and understood these disclaimers. In last week's video we took a look at the NASDAQ, which, as I mentioned then, is showing a very clear and beautiful analysis at the moment. And so let's start today's video by taking a look at the NASDAQ again. We will also take a look at the S&P 500, which is showing a slightly different picture, but not very. Let's first of all start with the bigger picture. Of course, in last week's video we were discussing the confirmation, or the way in which we would confirm that this 80-day cycle trough has formed in the markets. It is likely that that trough has formed, and we'll take a look at that in a little more detail in a moment. But in terms of the bigger picture, we have the big 54-month cycle trough which formed in March of 2020, and these semicircles show you the bigger picture and the fact that we are now coming down into the first 18-month cycle trough following that trough of March 2020. There is the nest of lows for that 18-month cycle trough. We've been discussing it and anticipating it for a few months now. It is expected, as you can see, probably in about July. And in fact, we can refine our expectation at this point and start counting the days down to that trough by taking a look at these bar counts that I have displayed on the chart. First of all, the number of days that have elapsed since the 20-week cycle trough that formed at the beginning of March has been 77 days. The average number of days in a 20-week cycle is 136 days. And so that leads us to expect that about another 59 days will elapse until the 18-month cycle trough forms, or I should say until the next 20-week cycle trough forms in the market. And of course it will be synchronous with the expected 18-month cycle trough. There have been 200 days since the last 40-week cycle trough, which formed at the end of October or beginning of November of last year. There are 272 days in an average 40-week cycle, and so our expectation is that the next 40-week cycle trough will form in about 72 days, and of course that will also be synchronous with both the 20-week cycle trough and also the 18-month cycle trough. Finally, there have been 424 days that have elapsed since the March 2020 trough, and the average number of bars in an 18-month cycle is 546 bars or days, and so we expect about another 122 days to elapse until the 18-month cycle trough is expected to form. Those bar counts give us an expectation of when the trough is likely to form, and of course that is presented visually in the form of this nest of lows at the foot of the chart. As a matter of interest, why is the 18-month count so much further on? It's a good 50 or 60 days after the 40-week and 20-week counts would have us expect. The reason for that is because the information that we have about the 20-week and the 40-week cycles is a little more recent, and it is possible that these 20-week and 40-week cycles have been slightly compressed, which is what would be expected under bullish market conditions. And so that is why those cycles have recently been running short, or at least the troughs have been occurring a little bit early, leading us to expect the next troughs of those cycles to also, of course, occur a little earlier than the projection of the 18-month cycle count would have us expect. So that is the bigger picture. Let's take a look at the shorter term picture. The first thing worth mentioning is that we still have a nest of lows at the foot of the daily chart for the 80-day cycle trough, and that is because Sentient Trader has not yet confirmed the position of that trough. And in last week's video I spoke about the various methods that we use to confirm the position of that trough. Often when people are new to Hurst cycles, they get a little concerned about the fact that they are still seeing a nest of lows at the foot of the chart and they're not seeing a neat stack of diamonds, which is why I often say that diamonds are not a trader's best friend. These nests of lows tell us when we are expecting a trough. The process of confirming that the trough is there is a little complicated, as I expressed in last week's video, and we certainly do not wait until those diamonds are positioned on the chart in order to make trading decisions, for instance. In a moment we'll take a look at the S&P 500, where you'll see the picture is a little different and it makes for an interesting comparison. However, for the many reasons that I discussed last week, I am fairly convinced that this is the 80-day cycle trough that has indeed formed in the markets. And so what is our expectation, or what is my expectation at this point? Well, the first thing that I expect is that the new 80-day cycle is probably going to be less bullish than the previous 80-day cycle. What does that mean? Well, here is the M shape for the previous 80-day cycle, very roughly drawn in. And as I have discussed in previous market update videos, we can measure the bullishness, if you like, of that particular cycle shape by measuring the percentage of time at which the peak formed in that wave, and also, of course, measuring the bullishness in terms of price by measuring the percentage of the retrace that brought us back to the 80-day cycle trough that formed earlier in May. But the point is that the next 80-day cycle is expected to be less bullish than the previous one, and it might even be bearish. Why is that? Well, because the 20-week cycle, which was pushing up during the previous 80-day cycle, is now, of course, turning down and is going to be pressing downwards on price to bring us into the 18-month cycle trough. And so that is our first expectation. We are going to see another M shape elapse, and it is going to be a more bearish M shape than the previous M shape, or perhaps I should say less bullish. Nevertheless, we are certainly expecting an early peak, and we are expecting it to be less bullish than the previous 80-day cycle. So I've just mentioned an early peak, and so let's take a look at a little more detail here as well and zoom in again. That early peak is going to be a peak probably of the first 40-day cycle, because of course we need 2 40-day cycles to elapse in the current 80-day cycle. And one possible place in which that 40-day cycle peak could occur would be where we are able to generate a target on the basis of price crossing this 20-day FLD. Now that target I have already calculated, and it is at a level of about 13,686, which is certainly lower than the previous peak that we saw at the end of April. So does that mean that the NASDAQ is not going to achieve a new peak before it comes down into the 18-month cycle? It doesn't absolutely mean that it isn't, but certainly the odds are diminishing that we are going to see another peak before the 18-month cycle trough. Which brings me to the subject of today's video, which is confirming peaks forming in the markets. I thought it would be an interesting thing to discuss, particularly as we were speaking about confirming troughs in last week's video. Because as price moves up again, we are of course wondering whether the peak that we saw at the end of April was in fact the peak of the current 18-month cycle, indicating it is the highest price that we will see before the trough of the 18-month cycle forms in the middle of the year, or is it possible that we will see another peak? So how do we confirm that a peak has formed in the market? And the answer is that we use the same tools that I discussed in last week's video to confirm that troughs have formed in the market. However, there is one very big and important difference. The principle of synchronicity, which I referred to in last week's video, which states that the troughs of cycles in stock markets are synchronized, does not apply to peaks, of course. And so we cannot use the same logic that we used last week to use a shorter cycle confirmation as being absolute confirmation that the longer cycle has also formed a peak in the market. So let's discuss how we could confirm that the 18-month cycle peak has formed in this market. First of all, let's take a look at the FLD. The FLD that confirms that the 18-month cycle peak has formed in the market is of course the 18-month cycle FLD. And so we would need price to come down below this FLD to confirm that the 18-month cycle peak has formed in the market. That's not really very useful. And in my opinion, the fact that we have a very bullish move out of the 54-month cycle trough in March of last year indicates that those longer cycles are pushing upwards. Certainly the 54-month cycle has had a good deal of strength to it, and it is also possible that there might even be a 9-year cycle that is also pushing up. That's debatable, so we're not going to rely on that idea, but the fact is there has been a good deal of bullishness, and so it is quite possible that far from price crossing down below the 18-month FLD, it will in fact form its trough at the level of the 18-month FLD. And so waiting for price to cross below the 18-month FLD might be a very disappointing experience. So can we step down to shorter cycles? Well, yes, we can. Let's consider the 40-week cycle. Even though the peaks are not synchronized, the fact that our previous 40-week cycle clearly formed a peak over here, because there is the trough of that 40-week cycle, indicates that if we have confirmation that a 40-week cycle peak has formed, we would then expect price to come down all the way into the next 40-week cycle trough, and therefore we must also have confirmation that the 18-month cycle has formed a peak. And so we display the 40-week cycle FLD and notice a really interesting thing. Let's zoom in and take a closer look at this. You can see that the 40-week cycle FLD has been providing support to price over the past 2 weeks. Now, in order for price to get down to the 40-week cycle trough, we would expect it to cross down below that FLD. And so the 40-week cycle FLD is certainly one to watch. What about the 20-week cycle? Again, we could use the same reasoning on the 20-week cycle, and you will notice that here again, price has been right at the level of the 20-week cycle FLD over the past week or two. And again, we would expect price to cross down below the 20-week cycle FLD on its way down into the next 20-week cycle trough. And so the 20-week cycle FLD is going to be another interesting line to watch. Finally, what about the 80-day cycle FLD? And this paints a very interesting picture, as you can see, because price dropped below the 80-day FLD a few weeks ago and has formed its probable 80-day cycle trough below the 80-day cycle FLD and actually slipped below the projected target for the cross below the 80-day FLD, indicating that we are beginning to see some bearishness come into this market. Now, price would need to cross above the 80-day FLD to first of all confirm that the 80-day cycle trough has formed. The fact that we are beginning to see some bearishness and that we are looking for a fairly bearish 80-day cycle to develop, or at any rate a not very bullish 80-day cycle, I would not be surprised to see that price fails to cross above the 80-day cycle FLD. Nevertheless, the 80-day cycle FLD at this moment doesn't give us any useful information for confirming the big peak has formed in the market. Now let's turn to our other tool, the VTL or valid trend line, which is very useful for confirming both troughs and peaks in the market. We'll start with the 80-day cycle VTL, which is this one over here. And as you can see, that doesn't provide us with any useful information because it is not joining the 20-week cycle trough to the recent 80-day cycle trough. Why is that? Well, it's because the 80-day cycle trough has not yet been confirmed by Sentient Trader. Sentient Trader is a bit of a stickler for the rules, and so it won't draw that 80-day cycle VTL until it has confirmed that that trough is in place. So what about the 20-week VTL? Now this is very interesting. The 20-week VTL joins the trough of the 40-week cycle here in early November, I think that was in the NASDAQ, and of course the 20-week cycle trough here in early March. And you can see that price last week came down and almost touched that 20-week VTL. In fact, let's zoom in and see whether it did touch it. Looks like on Wednesday it just came down and touched that 20-week VTL and then bounced back up again. There are some Hurst purists that would call that a cross of the VTL. I'm not one of them. You will often see situations where price will actually touch a VTL and then bounce back up again. The fact that we had such a weak 10-day cycle following the potential 80-day cycle trough earlier in May is another indication that we're beginning to see some bearishness in this market as a matter of interest. But the bottom line is the price has not yet crossed below that 20-week VTL. When it does cross below the 20-week VTL, that would confirm that a peak of the 40-week cycle is in place. That's the way in which the rules work for VTLs. When price crosses a VTL, it confirms that a peak or a trough of the next longer cycle in the nominal model has formed in the markets. And so I will certainly be watching the 20-week cycle VTL very closely for confirmation that the 40-week cycle peak has formed in the markets and that we are therefore now on the way down to the 18-month cycle trough. Now let's take a look at the S&P 500, and as I mentioned, there's an interesting thing that has happened in this particular analysis, which is that the 80-day cycle trough has been confirmed on the daily chart. The reason for the fact that that trough has been confirmed are to be found in last week's video where I discussed the confirmation of troughs, but it increases my confidence that the 80-day cycle trough has formed in most stock markets around the world. And so we have a very similar, bigger picture in the S&P 500, which is that, of course, we are now in our final 80-day cycle, which should bring us down into the 18-month cycle trough, which is expected a little after the middle of this year. You can see a much messier nest of lows here for the 18-month cycle trough, and that is because of the difference in the analyses. But to stay on topic, let's take a look at the FLDs and VTLs and determine how we can confirm that the peak has formed in the markets. Again, we'll start with the 18-month FLD, which, for the same reasons that I discussed in the NASDAQ, does not really provide us with any very interesting information, in my opinion, except for the fact that I think it is possible that the 18-month cycle FLD might provide some support. And I wouldn't be very surprised to see the 18-month cycle trough forming at about the level of the 18-month cycle FLD. We'll have to see what happens when price gets there, of course. The 40-week and 20-week FLDs are interesting on the S&P 500 because you can see that they are forming a little bit more of a pattern. They aren't quite as tied up in the same sort of price level as they were in the NASDAQ. And you can see that a price cross down below the 20-week FLD might get us down to the level of about the 40-week FLD, and that in turn might get us down to about the level of the 18-month FLD. None of them are projecting potential targets way beyond the level of the next FLD, but of course we will have to see what happens as price encounters each of those FLDs on its way down. And so each one of those FLDs is going to be very useful to watch in terms of confirming that the peak has formed in the market. Now in the S&P 500, and I should probably zoom in on this so that you can see it in a little more detail, price has come down and found support at the level of the 80-day FLD over the past 2 weeks, as you can see over there, and it slipped a little below it last week but has climbed back up again above it. And so the 80-day FLD is going to provide us with a useful line to watch in terms of confirming that the 80-day cycle peak has formed, and of course at that point we are expecting that to be the final peak on its way down to the 18-month cycle trough. Now let's take a look at our VTLs, and of course we do now have a VTL for the 80-day cycle because of the fact that Sentient Trader has confirmed that the 80-day cycle trough formed earlier in May. Here is our 80-day cycle VTL. That's going to provide us with a very interesting line to watch, because when price crosses down below the 80-day cycle VTL, it will confirm that the 20-week cycle has formed a peak in the market. The next VTL that's going to provide confirmation that the 40-week cycle peak has formed in the markets is the 20-week VTL, and so we will certainly be watching that line as well. Then we have the 40-week VTL, which is presenting a very interesting situation because, as you can see, price has in fact come down to that 40-week VTL, and it looks as though it has crossed below it. Now there's something to mention about the price crossing of VTLs, and let me zoom in a little so that we can see this in a bit more detail. There are some Hurst cycles purists who claim that the kind of price action that we saw back at the beginning of March, where price dropped down below the 40-week VTL and then popped back up above it the very next day, does in fact qualify as price crossing that VTL. I don't abide by that absolute strict application of the rules, and I know there are some that differ with me. But if that had qualified as price crossing below the 40-week VTL, then that would have confirmed that the 18-month cycle peak had formed in the markets, and it would have been that peak over there. Since that time, we have, of course, seen higher prices, and so we have an anomaly there, which is why I take these sort of taps of the VTL, and we saw another one over here towards the end of March. I take them not very seriously. In my opinion, they don't qualify as price crossing below the VTLs, but I'm sure that I will receive comments, because I know there are some Hurst cycles purists who believe that they do qualify as price crossing of the VTL. However, what has happened recently is certainly interesting, because price has crossed down. It bounced back up again 2 days later, then it crossed back down again and struggled to get back up again. It looks as if though, I've got a little bit of overnight price action on Sunday night, it looks as if though price is trying to get back up to that VTL, but it certainly looks as if the price has crossed below the 40-week cycle VTL, indicating that the 18-month cycle peak has formed in the markets. I do hope that you found this market update useful and interesting. I have hopefully pointed out several levels that you can watch in terms of confirmation of the fact that the peak has formed in the markets and that we are on our way down to the 18-month cycle trough. If you have any questions, please put them in the comments below the video. I look forward to hearing from you.